Hello, you're watching Flux TV and I'm Darina El Zain. Welcome to the Lunchtime Market Update, the latest movement in oil price data, all packed into just a few minutes. Oil has suffered the biggest monthly loss since March 2020, plummeting 19% as investors are weighing risks posed by the new Omicron variant of the coronavirus. The CEO of Moderna has said that vaccines are likely to struggle to protect against the newly discovered variant and that the world may now need new jabs. Crude oil prices rose by as much as 7% yesterday during the intraday session to reach highs of $77.02 as fears over the impact of the Omicron variant ebbed, though they later dropped and settled at $73.44. Brent is currently trading 1.98% lower than yesterday's close at $71.46 per barrel. There has been a very weak start in the dated market as Brent spreads were hammered. Jan-Feb spreads underwent a steady decrease from a high of $1.18 to settle at a low of 22 cents per barrel. Today, as the January contract expires, Jan-Feb is trading at 4 cents per barrel. DEC and Jan-DFL went off to 25 cents per barrel and 40 cents per barrel respectively, but DEC-Jan-Roll stayed firm at 15 cents per barrel. All eyes remain on the OPEC Plus meeting this Thursday for a decision on January output after Saudi Arabia's energy minister says he's not really concerned by the new variant. Macroeconomic data from Asia points to improvements in leading economies, a positive signal for energy demand. In China, the Manufacturing Purchasing Managers Index returned to expansion, while factory output in Japan edged up. If we look into refinery margins, we see an upward move in European margins and a slightly weaker to stable move in the Asian refinery margin. European products are seeing more support in general. It was a choppy morning for naphtha with plenty of activity during the window. DEC crack traded up as high as $2.20 per barrel. Spreads are generally bid and the East-West is unchanged, trading exclusively at $16.50 per metric ton in December. In the HSFO curve, the front barge crack opened strongly, trading 65 cents stronger at minus $11.65 per barrel. Buying flows have been existent since last week, while the East sees slight pressures leading to some slight selling flows in the East-West. And a quick look at some other stories making the news. India's gasoline output rose in October, with production hitting a 7-month high on robust local demand as driving activity accelerated. But a sense of cautious optimism prevails as the new COVID-19 variant, Omicron, emerges worldwide, threatening to put brakes on this recovery. Refinery and trade sources said that China's oil companies are expected to resume gasoil exports in December as domestic supply shortage eases, but the volume will likely stay subdued in comparison to gasoline and jet fuel outflows. Thanks for watching our Lunchtime Market Update. I'm Darina El Zain. Don't forget to subscribe to our YouTube channel, Flux.live, to stay up to date on future content. There's plenty more in store across our platforms in the coming days, so please do join us again later.